Hey YouTube, it's Nick here. Welcome back to the channel. So it's actually been a great week in the market. We're going to go over a little bit of it today. A few things that we're going to talk about. New CPI data that just came out. More all-time highs for the S&P 500. Can we go higher? We'll see. And we're also going to talk about if now is a good time to buy, especially if you never invested, right? And that's the whole point of this channel is for people that might be on the sidelines or people that are thinking about getting into it, maybe don't know too much about it. If everything is going up right now, and the biggest thing is you don't want to buy high and then sell low. You want to buy low and then sell high. So we're going to talk about that, and then we're going to conclude with what I'm doing, and we're going to take a look at the portfolio. We're getting close to that 5K range, and yeah, let's just hop straight into it. So CPI data. Now, I'm no, I'm not about I'm not about to go through all of this. Uh, but I did look over it. I did put some of it in AI to give me a gist of what's going on and what's happening. And the main thing that you need to know is that inflation kind of cooled. It kind of like 0.1%, I guess. It kind of cooled. So what that means for you is that basically when you're out shopping right now, like prices are still rising for everything that you buy. Prices are still rising, but it's just not rising as fast. Another key thing to know about this is that even with all of that happening, people's paychecks, they're not making as much money still. So while inflation is still rising, people aren't making enough to outpace that, if that makes sense. And then on top of that, you still have everything rising around you that you're spending your money on and buying, but you once again, since your wages aren't like increasing fast enough, you still have less left over when the month is over. Now, a little bit of what's going on right now is that equities are flat to slightly negative. That's really it. Crypto regimen stays supportive but lacks directional conviction. So, quick thing about uh, quick thing about today is that equities basically people are taking profits right now. Some companies are getting jumps because a lot of people like to make their buys on Friday. As far as crypto, everything right now in crypto, you can obviously tell that it's still a bear market when it comes to cryptocurrency. If you look at the fear and greed index, it's sitting at a 29, right? You got crypto sitting around that 62, 64K region. If you are interested in that, this is actually a decent accumulation zone for that. You already know on the channel, I don't think nothing else matters in crypto really. Maybe some Ethereum, maybe. But if you look at the VIX too, that's actually dropping, and that's basically going to help us transition into how the stocks are doing. So 14 means things are doing pretty good in equities, or even just in a general sense. And if you do look at the stock market, we're sitting in that greed territory because once again, like I said, the S&P 500 is hitting all-time highs. All these companies, the hyperscalers, chip makers, everyone is having good balance sheets and their prices are just jumping 10, 15, 20% after hours and just in general. So everything's actually looking good. Now, another thing that we're going to talk about is basically that we're going to react to a video, and this is basically from a UBS managing director, and he's going to say the opportunity here is still unbelievable. So let's just tap into that real fast.
To the floor show. Joining me now, UBS Managing Director and Senior Portfolio Manager Jason Katz. I don't know, you don't talk individual stocks, but does it surprise you that somebody might be coming in here? Again, it's just a Reuters report, but maybe to scoop up Workday, which has certainly been pared back a bit.
It doesn't surprise me. What it tells me is two things. One, the capital markets are finally working. We're seeing M&A activity, IPOs, et cetera. And what it also tells me, and you said it, AI maybe isn't eating the world. So software is supposed to be rendered useless. Apparently not. Silver Lake wouldn't be stepping in if that were the case.
Okay, so Workday right now, we just want to let people know, is up 20%. There are a lot of names in that space that have been chewed away a bit. I mean, depending on when you're looking at the timeline, Intuit, Datadog, MongoDB, now ServiceNow. So when you see the free market working and things that have been allowed to sell off, with the worry about AI, does it surprise you? Well, today you got the memory chips going absolutely bonkers, but then you start to see investors questioning some of the reports that they see, whether it's Cisco or Cerebras, some of the other names.
Yeah, I mean, at some point you have to question in terms of where their ROI is relative to all the money that's being spent. And so everyone understands that the opportunity set here is unbelievable. 800 billion of spending this year, 1.2 trillion of AI spending next year. You add to that mobilizing a $500 billion from the 6 asset managers that are partnering with NVIDIA. It's no wonder that last quarter or this quarter, 50% year-on-year growth. Now, that 50% earnings growth, to some extent, was because of Anthropic being on the books of these hyperscalers and some of the energy companies having great earnings, but earnings are just breathtaking. And I think that cycle continues, but the rubber has to meet the road in terms of profitability.
With all of these companies borrowing a lot of money to grow and to invest in the hyperscalers, you look at PPI for July. This is the wholesale inflation number. It came in rather benign, very, very kind of cooler, still moving higher, but benign. Yesterday, the CPI, the consumer price index for July, it's interesting because energy fell. The price of energy fell, certainly from the war highs. The war started February 27th with Iran. But something else may be at work here. High Frequency Economics, I was reading their report, and they said, July energy prices fell. Something else is pushing up inflation. And I remember seeing yesterday that Smithfield Foods, which is the big meatpacking processing plant, they had said that they started to see that inflation-pinched shoppers are actually cutting back on packaged pork. What does that mean? We've got a little bit of weakness there and then strength elsewhere. What if the Fed raises? Beth Hammack was one of the dissenters in the most recent move by the Fed to keep rates where they are right now. And she says we need to start tightening rates now. How does that affect these hot companies that are borrowing so much money to build out infrastructure for AI?
I think it would be a mistake of epic proportion for Washington Company to raise rates right now.
Really?
Yeah, well, CPI year over year is 2.5%, which is below pre-war levels. We have the job numbers showing some weakness. We have inflation directionally showing signs that they are improving. The best move here is no move. The last thing that Washington Company want to do is to tip us into an unnecessary recession and curtail the spending on AI that's only going to make us more productive and also eat away at inflation as we become more productive.
So your trade is what? You said that there's a broadening trade now. People talk about it's broadening now into energy and utilities and build out of, say, the grid for these infrastructure names of AI, but that's not what you're saying. You're saying consumer discretionary.
I am, because you look at consumer discretionary is down around 1.5% on the year. The S&P is up, 14% on the year. That's a pretty breathtaking gap between the two. And I look at the consumer, who makes up 2/3 of our economy. They may be getting a break at the pump should energy prices continue to come down like they are. They may get a break if the Fed is going to do what we forecast they're going to do, and that's nothing, and then ultimately a rate cut. You add that together with a job market that's still holding in there, but showing some signs of weakness, but still holding in there. That's a recipe for increased consumer spending. So we like that cohort very much.
Okay, and that said, we're seeing that we started, and we're going to talk about this coming up, it's some of the luxury names, and that to me is consumer discretionary. They're struggling a bit here. And then you balance that with Smithfield Foods saying inflation-pinched consumers aren't buying packaged pork. You still like these names because discretionary is what you want to buy, not what you have to buy.
Exactly, but the stock prices reflect much of this. I think you have the eat the rich fear from some of the wealthy. Maybe I shouldn't spend that much because I might not have that much. And then you have the lower end consumer that's looking at the price of the pump that's prominently displayed every time they drive past the gas station, and it's causing them to sit on their hands. But I think we're going to get clarity on all these issues, and the valuation gap, you want to be ahead of the curve. And so I think you want to get long those names before that we get that clarity.
Before that, exactly, guys. You want to move to where the puck is going, not where it is at the moment. Good to see you, Jason. Thank you. Jason Katz.
Okay. So as far as everything that is going on right now, I would say that we are in a point where everyone, a lot of people, whether you believe it or not, like there's a lot of kids that are born. All right. So we just got done with back to school shopping, and I think so. All these retailers, they're going to be getting massive. They're going to be earning a massive amount of money. They're also going to be spending a lot of money on advertisement because keep in mind, we just got done with back to school. All right. So kids are going to be in school for a bit. And then what comes after that, right? We're going to have fall. Then we're going to have Halloween, right? So all these places, people are going to be buying candy. People are going to be buying costumes. So a lot of retailers are going to be seeing a lot of inflow from people or from consumers because this is just basically a cycle every year. And then what comes after October? Then you're going to have what they call Thanksgiving, and then what's after that? Christmas, right? So there's gonna consumers are gonna spend. That's what and I think a lot of more people have money than they particularly say because all these companies they constantly show that they have record profits and things like that. Now, when it comes to pork, I ain't gonna lie to you, I don't really know people like who like pork. Like I like bacon, right? But I don't care about that. The point is that these numbers came in, the jobs data that we got a while back. It shows that a lot of people are getting laid off. And if you, I was actually looking at it a little bit more, and if you took the healthcare sector out of the jobs report, unemployment, like the jobs report would be abysmal right now. And we already talked about that in our last video, where basically the issue with healthcare is that there's a lot of opening positions for these jobs, but there's a lot of people who either A, don't want to work in healthcare, or B, don't qualify for healthcare. So they basically have a issue right now where there's a skills mismatch, where there's a lot of people that wouldn't mind necessarily getting into the industry, but they just don't meet the requirements of getting into that. But as far as the retailers and everything, people are spending money. No matter what, everyone's going to be going in looking for the deals. You got the CPI data, so basically all it's saying, the only thing that you need to know is that everything is still going up. It's just not going up as fast as it usually has. But like I said earlier, your wages aren't increasing with that pace. So you're still not having that much money left over when it's all said and done. Because like I always say, when the thing with these people is that, and it's not necessarily a knock against them, but and he kind of mentioned it a little bit towards the end, but the knock with them is that they kind of look at things from the perspective of themselves, their bubble, everyone that's in their immediate surroundings, and they can't fathom or comprehend the average person going day to day has to deal with. Now, gas is like, I'm in California, so gas is high. It's over $5 a gallon. But what you need to know right now is that it seems that bad news is what's driving the market higher. I can't like I don't have a better way of saying it. It's like the more bad news that we get, the higher the stock market goes. So that's been an interesting thing. Now, should you buy? Uh, I'm this isn't financial advice. You do your own research, but I I think now is still a decent time to buy. The thing is that when it comes to all of this, is that there's so many good opportunities that are going on in the market. Like there's a lot, and no matter what the sector is. But my thing with that, especially if you're someone, because I'm looking at like all the things on my watch list right here, but like my thing with all of that is it's hard to pick it's hard to pick when you have not that much money. Like there's only so much money you can invest into the market. So what my recommendation would be is, especially if you just started, is get you a low cost index fund. You can get you a low cost index fund that represents the S&P 500. Again, I'm not if you are new to this, basically this is going to help you track the top 500 companies that are in the United States. Now, I'm not going to get into like why you pick this over picking individual companies, but my thing is that there are so many good opportunities out here. You don't, unless you're a millionaire, you don't have the time and energy to look at these balance sheets and these companies and figure out like where their financials are to pick individual ones. And there's a lot of good ones, but it's more about when you get in and how long you stay in, if that makes sense. So if you're dollar cost averaging, then the S&P 500 would be the best thing. Even though we're near all-time highs, it would still be, I would recommend to someone getting started, the best thing that you would put any revenue into. And then honestly, I would just build that up first. Like I would build that up, and then you could maybe look at like a QQQM or a SEHD or something, or a Vexus or anything to like diversify down the line. Now, a little bit as far as what I'm doing. So the portfolio, it's actually approaching 5K. So, and this has been a phenomenal transition. Now, acting a little wonky today. I don't know why it's saying PAX G is down 100%. That's not true. This is basically my crypto holding. So the PAX G, that's my exposure to gold. Basically a little bit of what I've been doing with that is like if I do spend anything with my debit card, I basically been doing like the acorn roundup technique with my USDC. So if there is a little bit of like, basically this 72 cents that you see here on the screen, I would just put that into gold. So I've been doing that. We've been not putting any money into Bitcoin this month, at least not new capital. We've just been holding USDC earning rewards. And the list is actually longer than this because I've also been using my debit card as well. So if you want to know a little bit about the strategy I've been implementing with that to still accrue Bitcoin without actually putting new capital into Bitcoin, I'll leave a card for that video somewhere up here. Now, back to the overall portfolio, I added some new things. Now, one of the things that I added that is the Robinhood Venture Fund, and this is the second one. So this one's I'm gonna be honest, it just has a lot of exposure to like it's a lot of exposure to tech, and it's a lot of exposure to companies that are not even in their final stages of development, but basically they're going to be, at least how I'm seeing it, is basically going to be the next wave of how we use AI. Whereas at first, you have like in Robinhood Ventures 1, right? You have like OpenAI, you have Anthropic, you have SpaceX, but like what the way AI is that you use your prompt. and then it spits out whatever information it needs to. Whereas now with the Robinhood Ventures 2 fund, this is basically going to be a little bit more on like that agentic side, whereas you're kind of having companies that have AI infrastructure and tools that do the work alongside you. I wish I can make more sense of that. But that's a whole different topic for another day. But I only bought one share. Now, the thing is the expense ratios and stuff on this is pretty high and they have like some other stipulations with it. But we're up pretty good on that. We're up about 12% on the first Robinhood Ventures, and then we're up about almost 6% on that. Another thing that I added to the portfolio, we added DRAM. So I'm gonna start because again, there's so many opportunities in the market. One, it's hard to pick the clear winner, like to because if I had it my way, who I wish I could go into the future and figure out who's going to be the winner in 2028, 2029, 2030, 2040, and then I could just buy that. But you don't know. But the big thing is that it's still going to be chip companies that are going to be the driving forces of those that are at least earning the most revenue in a market like this. I also added Dutch Bros. I've had like I've been there twice in my life, but I've seen a lot of people buy from there, and it kind of reminds me of the business. It's called Checkers or Rallies. I don't know if you know about them, but it kind of reminds me of them where you can kind of like walk up to the business. It's not a sit down like Starbucks, but I was looking at kind of what they have going on, and then I'm seeing like in my everyday life of how people have gravitated toward like I've seen more people at least in my surrounding, I'm seeing more people um have Dutch Bros cups versus Starbucks cups now. And on top of that, the way the business is kind of structured is they're capitalizing like a lot, especially outside of California. I know they bought like basically the salad company that went bankrupt in a few other states, and then they're gonna turn those into more Dutch Bros. But basically, they're popping up everywhere. If you're looking at if it, from what I'm seeing, it doesn't take that much money to keep the business open, if that makes sense. Like on an everyday, like you don't have to worry about people coming in, messing up your store. The only people you have inside the store or only people you have inside are employees. So you don't have to worry about that. The only thing you have to worry about is the outside. I also added Netflix as well. Everyone is it makes sense why Netflix is going to be a good leader in the future. So I'm gonna start DCAing into them. The main structure with all these, because as you see, like right here, this isn't a lot of money. So it's like $5 here, $6, $10 there. Basically, whichever has the higher money that you see. So like we're approaching $38 on AMD, $34 on Celsius. Though, and those are the ones that I'm kind of having the higher conviction in. If anything that's basically close to $20, that's what I'm gonna be putting my money into the most. Now I'm gonna look at this maybe in a couple of months. We're gonna look at Meta as well, see if we're gonna still keep them or not in the portfolio because I already get exposure through QQQN. So it doesn't like in theory it doesn't necessarily matter if I even hold it or not. Maybe it shouldn't. Maybe maybe I should. But I'm also going to be looking at Microsoft some more. So, like, this is still the free stock that we got from Robinhood. So, if you are thinking about getting into investing, link for that would be down in the description. But it jumped up so fast that I didn't feel like I had enough time to DCA into it. And that's going to bring me back to what I was saying earlier. Whereas, if you should even buy anything now. And this is why I'm recommending the S&P 500. So whether like a SPY or a VU or even if you just want complete diversity, something like a VTI, but something that has the S&P 500 within it, because there's going to be a lot of winners, even though we are at all-time highs for it will go higher. And the way that these companies are moving their evaluations, their earnings reports, it's going to show. So I believe the market's going to keep going higher. We might get some pullbacks here and there, but in the long run, even if you start doing maybe $1 a day, this can actually turn into something that you could be proud of, in the future down the line. Now, as far as everything that I'm really doing, like for the rest of this month, the same goal, like I said in my other video, it's still the same, is that we're focusing on building up cash and a buffer so that way we can earn yield through USDC, and just basically have it park and sit. And then the money that we're buying, or at least the asset that we know what matter what are buying every day is VOO, S&P 500, and then SEHD, which has been a sleeper because it has continuously hit new all-time highs. And I'm still contemplating if I should do maybe a share a week or share every 2 weeks on that. But this is how it's all looking. and I'm pretty okay with it. As you see, the Bitcoin position, it's basically going low. I would say when I started uploading my portfolio on this channel, it was at maybe around 65%, almost 70. So the main thing is we want the equity side to nearly compete with Bitcoin. And if we look at the equities, we're over that 20% mark where it comes. We're actually closing in on 30% of we're actually going to be closing on 30% soon of the entire equities being a part of the portfolio. So I'll have a video come out about that eventually. Even though PAX is messing it up a little bit, we're kind of sitting around 30 like $3,970 or so. So that's just kind of what's in everything. But this is basically the if you just do the simple math, this is where we're at with PAX Gold. You have your Bitcoin in here, and we have Ethereum that we're not adding to. I might add some to it if it breaks below my average price. My average price is about $1,859. But if we get like another 1,500 again, I probably will touch that. But the main thing right now is to just build up stability, build up just cash on the sidelines. And it doesn't even have to be money that I can invest, just something I can earn a yield. And that way, if anything comes up outside of markets, I can just be prepared for that. So let me know what you think, especially if you made it to this point of video. I hope I shared some insightful news with you. If you do feel like you learned something, please drop a like, subscribe if you're new, and I will check you all out on the next video. And also don't forget, if you are new to investing, a link to my Robinhood, or at least your new Robinhood account. I'll leave a link in the description so that way you can just get started for just $1 a day. $1 a day. And if you sign up through the link, you will get a free stock that ranges from $5 to $200. That's free money. My that's free money. That's free money. But thanks for watching. I'll see you in the next video. Hope you have a good day. Bye.